Well, what a week for the market it's been, right? Full of sound and fury, but up for interpretation as to what it's signifying. Now, we know there are a few themes, including politics. The GOP House members today passing the budget. That's good news, but the thin margin points to a more serious challenge for tax reform, and consequently, the market actually drifted lower into the close. Then there are the economic underpinnings. Now, stop me if I've told you this before, but the nation is in the midst of a manufacturing renaissance that not only will it provide economic healing, it's going to help fight against that homelessness and some of the helplessness that we've been talking about. That's a key component of the drug epidemic, by the way. You know, today the Kansas City Fed report on manufacturing shows that the composite is now at its highest level since March of 2011, surging 35% in the past month alone. By the way, some comments from that report are interesting. One was, if tax reform is real and significant, we will be adding people, equipment, and expanding our facilities. And then there's the warning on the skills gap crisis resulting in more jobs for machines and robots. Quote, we're unable to find necessary skilled workers we need to meet customs delivery requirements. We will be investing heavily in the next 12 months in automation to fill those jobs. All right, of course, then there's earnings. After the close, it was all about big tech and big results. Amazon posted in a monster number, 53 cents. That was only 1,600% more than what Wall Street was anticipating. The company beat on revenue. They guided in the current quarter higher. The initial reaction sees this stock a whole lot higher. And then there's Alphabet, Google, beating on revenue and earnings. In fact, earnings of $9.57, well above consensus of $8.33. Paid clicks, they're up 47% from a year ago. Consequently, that stock hit an all-time high in the aftermarket. Microsoft earned almost $1 billion more than expected, and 84 cents compared to 72 cents the street was looking for. The business mix was intriguing. The Azure cloud, though, up 90%. And by the way, that was a little bit less than hoped for. Intel, in the meantime, beat on revenue. Earnings of $1.01 was well above the 80 cents that Wall Street was looking for. Both its client computing and data center segments were great. They did very well, and management was able to raise their outlook from the previous guidance. Momentum darlings are going to be back, and that should help lead the way tomorrow. But investors are also going to have to grapple with the GDP and a whole lot of consumer data.